Good morning and welcome to the Financial Room. My name is Natasha Bridge-Mohan, your host for today. Happy Saturday and welcome my viewers. Well, today we're going to be talking about the benefits of investing through a qualified investment company. Things that you need to look out for and understand and be aware of when making that sound decision and choosing the right company for you. Now, values are very, very important. You want to make sure that you are investing your money into a company that shares the same values like you. I think that's a very, very important component. Now, what are values? Many different things in terms of your retirement income, your expectations in terms of what you're expecting to earn with your investment, long-term goals, short-term goals. Does the company have products and plans that represent the same values in terms of what you're expecting from your investment? Goals are also very, very important. Does the investment company agree with your goals? Are your goals realistic that they're setting for you? Is there any inconsistency in terms of what their exit strategy is for your investment versus yours? So that's very, very important that the values and the core values and the core goals align itself with the correct investment company and of course with you as well and your spouse in making those very important retirement decisions. Transparency is also next important one, my viewers. Now, what is transparency? Now, there's a lot of unsureness with the future. Investments are a very great model in terms of putting your money away for retirement, but transparency is very, very important to understand. Now, you want a company that is very transparent. And what does that mean? They're giving you the tools and terms and conditions of your investment. What are the rates? What are the type of products that you can invest in? Is your money locked in? How long is it locked in for? Those are very, very important. Are there any long-term fees? Are there any upfront fees? Are there any redeeming fees? So transparency is very, very important. And by having a great company that offers great transparency comes with disclosure. Now, what is disclosure? You want to make sure that you have adequate paperwork. You want to make sure that you're able to put pen to paper when you sign and understanding what you are reading. Everything is written in black and white and not necessarily in fine print, in very layman, easy to understand language. It's very, very important that when you read something and if it doesn't make sense, you ask. Again, when in doubt, spit it out. It's very, very important that you work with a company that enables you instead of disabling you in moving forward and getting those right direction in terms of advice and again, sound investment for an early retirement. You want to be able to invest in confidence. And how do you do that? And you do that by aligning yourself with great companies that will guide you towards financial freedom. Reputation is also very, very important. Get to know investors that invest in the same company. Talk to them about their experience, any hurdles, any advantages, disadvantages, and get to know what they like about that company or not like about that company. That again will give you the decision tool that you need to make when you want to put your money into a competitive investment tool. Now, in regards to reputation, consistency is also very, very important. Ask for graphs. Ask for charts, ask for performance reports. Look at what the company has been doing for its investors and how long it's been performing for its investors. Is there any volatility? Is there any risk for volatility? Most importantly, is there any risk for principal loss? That's very, very important. Now, gaining a lot of money in the stock market can be very, very, very enticing. But as much as you can gain a lot of money, there's a lot of volatility, which means you can come into a position where the money that you personally invested from your hard-working money can also be lost, wiped out. Now, you want to align yourself with products that are more secured, where the principal is secured, and if there's any fluctuation, it's with the interest or the dividend payout. Even better, you want to align yourself with a company that has consistent returns. So again, it all comes back with core values and goals and understanding the transparency and the disclosure terms of that company and aligning that company with you to see if there is a mesh, if there's a fit. I really encourage you to learn more about investment and start thinking about your future, not only for yourself, but for your loved ones too as well. Short-term pain, long-term gain. And the most important thing with investments, my viewers, is you want your money to outlive you. You don't want to outlive your money. So that's something very, very important to take away with you this Saturday. So ask yourself when you're sitting down and thinking about your future, when I'm ready to retire, am I going to outlive my money or is my money going to outlive me? And of course, building generational wealth is also very, very important for your kids, your grandkids, and your great-grandkids. There are very amazing investment tools out there where you can borrow low, invest high, earn a spread, or you can actually retire right now if you choose to, with some really, really great products if you have availability in terms of doing that. It was really great talking to you today. Hope you enjoyed today's topic. And remember, think about your future. It's a very important one. Have a great Saturday. Take care.